Hello and welcome to Scrolling with Ceazor. Today is April 13th, 2026. I've got a lot of news for you today. As usual, it's not financial advice. It's all just my own biased opinions based on some of the things I've read on Twitter. So before we get into that, let's take a quick look at the charts. So everything is green today for the most part, except ETH versus BTC for the most part. And so everything's up about 1% roughly. BTC's up 1.5%. Hype is up 3%. So Hype has actually recovered yesterday's red candle, but everything else hasn't yet. Okay, so even gold hasn't recovered its red candle from yesterday. Okay, so but we're looking pretty good. I actually took some of the stablecoins out of my Hype position because I had stablecoins down below here. I had the bottom down here. Now, I don't know if it's going to come back down into that range, but I don't want to buy down here anyways. So I'm going to kind of just play with this range. And I took these stable coins up because they're not interest bearing either. It's Hype USDC. So I don't want to hold USDC down here doing nothing. So I've moved it to a Yearn Vault. But let's get into the news. So first of all, I did a tweet. I retweeted Justin Sun yesterday. And the key thing about this is I basically calling him out for, he's complaining about, World Liberty Financial kind of rugged him. And he's complaining about that. And I'm basically saying to him, you got a couple things. Number one, you have the ability to read code, or you have people who can read your code. When you invest in stuff, because he's a substantial person in the space. When you invest in things, people will follow you. So you need to be more responsible. You need to do more due diligence because he's a leader in the space. Whether you like him or not, he has influence on a lot of people's capital by his actions. So he needs to think responsibility. And then the last thing I want to say is that we have the ability in DeFi to create sales contracts that are immutable, predictable, understandable. We don't need to do this trust me bro kind of contract deployments. Okay, so that's my ideas. Then Bante came out with a tweet earlier today or yesterday, whatever you want to say, and it's pretty long, and I don't want to go through all of it, but you can read through all of it. But basically, they deployed the contract in September of 2024, and then it was upgradable, and then they added version 2 in 2025, 11 months later, after Sun had invested. And then they added the blacklisting feature. They added the ability to seize the assets from people's wallets. And they say the reason for that is so that, if someone gets phished, they can recover those funds for those people. That's the point, I guess, right? So that contract has the ability to vest and do all of these kinds of things, but they didn't use it. They just chose to instantly give him 20% of his tokens. And then he did we don't know what his paper contract says with them, what his agreement with them is, because no one's disclosing this, but we can take all the information that Banteg is disclosing here is all stuff he scraped from on-chain, and you can see it all in his GitHub here, okay? So some of the things that are scary is number one is they have this category 3 specifically for Justin Sun's wallet. They have a category 1 for all of the other investors, but they have Justin Sun specifically isolated in his own little category, okay? They've got a multi-sig of 3 of 5, which allows that 3 of 5 can seize the assets from anyone's wallet, but they also have a single EOA that is also on that multi-sig that can freeze people's assets. So a single wallet can freeze anyone's assets at any time. Okay, so that's what they have in their code right now. Now you can read through all of his tweet here and do a little more information. Justin Sun actually retweeted Banteg and said, we want to know who this one person is, and we want to know who these multi-siggers. So they haven't even disclosed who are the people with the keys to this multi-sig and this single wallet. Okay, which is scary and crazy, right? Another crazy thing about World Liberty Financial is their X account is registered in Bosnia and I can't even say this, Herzegovina, Bosnia, right? So why isn't this thing registered in America? It's supposed to be America, a company, right? Okay, moving on to Gabriel. Gabriel Lexnode. He's talking. He's kind of defending USDC. So in the past, we've been talking a lot on Twitter about USDC having the ability to freeze, but not doing the responsible thing of freezing stolen funds, right? And Gabriel's kind of I don't think he's defending as much as he's being the devil's advocate here. Okay, so he's saying, the problem with it is that everyone sues companies for the smallest little things. Okay, if they have any ambiguity in their policy, they're going to get sued, right? So if they freeze anyone, so just to protect themselves from being sued, that they have the policy of, we will freeze anyone who the law enforcement tells us to freeze. So if the judges or the courts or the police, they tell him freeze this, they will freeze it. Otherwise, no. So we're depending on an antiquated system of which courts and warrants and the judges are not working on the weekends, and we're depending on that to police a system that is 24/7, 7 days a week, 365 days a year, that operates in seconds, milliseconds, right? We're depending on old guys in suits to think and assess and decide whether or not to freeze things. It's not going to work, okay? It just is not going to work. So the freeze function on these tokens like USDC is not going to ever protect us from hacks unless they change the policies. I think that they could have a policy of they freeze every single wallet that suddenly gets $50 million, 50 million tokens. Any wallet that suddenly gets $50 million is automatically frozen, and then they assess, and then they unlock it. I think they could do that. They could avoid maybe smart contracts or whitelisted smart contracts and stuff like this. They could do something like that. Now, would this heavily deter people from using USDC? Perhaps, and it might stunt their growth. But I think that's an alternative that could be explored. Okay, but anyways, you can read through his tweet here and his backing up of this with like law and stuff like that. Okay, moving on. So here we have Bojan. Bojan has a really good tweet here. He's assessing. He's responding to Con Abias. And Con Abias is like, the problem with the Bold stablecoin is several things. First of all, decentralized stablecoins cannot scale. Their liquidity is not sufficient, and you cannot use them on centralized exchanges. So Bojan kind of gets into it, and he's like, let's talk about these points, and we'll talk about them a little bit. So first of all, he's like, he contrasts centralized stablecoins with Bold. So, Bold is immutable, unstoppable. It's backed only by immutable, unstoppable collateral. So it's a very different product than what you get from USDC or USDT. So people like to compare them because they're both stable coins pegged to the US dollar, but they're very different products. It's like you can say, running shoes and cowboy boots are both footwear, so let's compare them. No, they're very different, right? Their purpose is quite different. So you need to think of it like that. Like Bold is a different asset than USDC or USDT and so forth. Okay, so the decentralized stablecoins cannot scale. He says true, but it's not a bug, it's a feature. So Bold is backed by ETH or Rocket Pool ETH and Lido Stake ETH. So it can only grow if ETH grows for the most part. Like you can never, there's no way Bold is going to have a larger market cap than ETH. It's just not going to happen. It's impossible. So it's backed by an asset that is already small in comparison to US dollars, right? Like US dollar treasuries. So it already has a shortcoming in that sense. It's never going to be bigger than the US dollar, right? So, or even US dollar backed stable coins like US dollar treasuries, because there's so much money there to be used as collateral, whereas Bold is only backed by ETH. It's a different statement. It's a different product again, okay? So you kind of think of it that way. So we can keep going with, what else does he say here? He also says the liquidity is not sufficient. He's like, you can swap 1 million bold and only get 8 basis points of slippage. 100K is like 2 basis points. So why you need to swap more than this? Like maybe you do. Maybe you need to swap $10 million, which is maybe, but the point is like, the point here is that as the market cap of bold increases, the incentivization of liquidity increases with it. So 25% of the revenue from all of the interest paid on the bold is sent to incentivize liquidity. So it's not like other stablecoins where the stablecoin can keep growing in market cap and the liquidity has to find its own way to incentivize it. This system automatically incentivizes liquidity. So as market cap grows, liquidity should grow alongside it. And he's like, you don't even need to swap. You can just use it. You can just deposit and bold into the stable coins. Okay. And I want to talk a little bit about this one, actually. So I look at it like this, okay? Like you can think of it as a stable coin, but I think of it as a leveraged ETH play, okay? So you can use ETH, but I prefer to use Lido or Rocket Pool ETH. So I'm getting ETH, right? And I'm earning more ETH because I'm using interest-bearing ETH. And then I'm minting these stable coins, a safe amount, right? And I'm paying interest on it, but I'm getting more in APR by putting it into like Yearn or putting it into the stability pools. So especially Yearn, because Yearn will aggregate the stability pools. So I think of it more like an ETH play than a stablecoin play. It's not like I'm just holding stablecoins. And I'm any kind of bold that I get, that extra bold I get from interest, then I kind of use that to buy more ETH, or I use it to pay for things I need to pay for, right? So you don't need to mint a whole bunch of bold and sell it all. Like there's no reason to do that. Like you mint it, you use the system, you gain your interest, and you sell your interest, or you use your interest to loop it and fold it back in and stuff like this, okay? So I look at it as a very different play than what is the play that you see with normal stable coins. And he does talk a little bit about like centralized exchanges. Yeah, okay, you can't go through there, but there are other ways to off-ramp, and he gives you some other opportunities. I don't think all of these have bold in them, but perhaps some of them do. I'm not sure. I'll have to double check that, okay? So moving on. So here we have Jeff Kidariskis. He's got a tweet here, and he's talking about the idea that people say, just get $2 million, put it in government bonds, and live off 70K a year. It's not going to work because, inflation is higher than the government bond interest rate. So you need to produce more than that. And this is a very fantastic example of why bold is a fantastic play, because, you're getting 6%ish, whatever that you're getting roughly 6% by the stable coin. So you're already beating the T-bills, right? For the most part, this is a variable interest rate, so it's not fixed. So it might sometimes be below or around or just above a little bit. But let's say, 6% beats it. So the stable coins you do have are beating T-bills already. However, because you've backed it by ETH and interest-bearing ETH, you're getting more ETH, and you're also hoping that ETH increases in value, and that will help you to beat the government bond return as well, okay? So think of it that way, okay? So let's move on to Mando. Mando's talking about Michael Saylor. Michael Saylor's doing this, like, he's kind of in trouble. He calls it a time bomb, like the whole MicroStrategy Bitcoin play is a time bomb. So basically, let me read through what he says here. So he's issued he's got 10 billion of preferred shares at 10 to 11%, and he can issue 25 billion more. That's $1 to $4 billion every year he owes, and that's on a software business that makes no money. Okay, it's just this Bitcoin. I don't want to call it Ponzi, but Bitcoin leverage play, right? So you can think of that, okay? It's a little bit scary for me and for the entire ecosystem, I think. Okay, so let's move on to Frax Finance. Frax has got a new peg pool. So another project has adopted Frax as their stable coin for liquidity, their pairing stable coin. So it's called EVA USDT. I don't know too much about this, but they basically offer the yield for Wildcat and Wintermute. So Wintermute has some loans on Wildcat, and EVA USD allows you to be exposed to this. You can check more about this company or this project and decide if you want this risk or not. Okay, so here I have a long article from Rectumides, and it basically goes into all the details of FRX. So FXUSD, another fantastic stablecoin in the space, and you can read through this. I can't get through all this. I don't have enough time, but you can check it out. It's a long article, and it'll give you a lot of to think about if this is a project you want to use. I really like this project because it's a place where you can open a CDP versus ETH or WBTC and pay 0 interest on it. Like that's pretty crazy and pretty wild. Okay, so last one we have is no, I've got 2 more. Okay, so Hey Anon has decided to convert their Sonic tokens into Anon tokens. So Anon tokens is their own token. So basically they are taking their treasury and they're buying back their Anon tokens with the S tokens. I don't know exactly why they're doing this. Sonic is struggling though. It is struggling quite a bit. And to show that, I had to retweet this out yesterday, as sad as it may be, is that they, for some reason, the Oracle for Sonic tokens and all of these markets is closing down. So Redstone is closing their Oracle on Sonic. So if you are in any of these silo finance positions, I had some leverage up in some of these. I had some, I was levered up in some of these because, I was. So if you are on any of these, then come, stop, don't borrow anymore, repay your positions. We don't want you to get liquidated, or who knows what's going to happen when there's no Oracle, right? And so that's pretty much it. This has been a quick one, I know. So thank you so much for listening, and goodbye.